Hi everyone, this is Isaiah Real, financial advisor with Laguna Wealth Advisors. Today I'm sharing with you my December 2018 market update. So let's go ahead, let's get started. Hi everyone, so as I mentioned today, I am sharing with you my December 2018 market update. Quite a few things have happened in the markets in 2018, and also quite a few things have happened in December. So I'm going to share a couple of thoughts with you here. Without further ado, let's get started. Three things I want to share with you today. Market update, so how the major indices have performed in 2018. Number two, I want to share with you sectors. What sectors I'm looking at moving forward into 2019, but also how sectors performed return-wise in 2018. And then lastly, I want to share with you something new and just a little bit of tidbit so that maybe you can use for yourself moving forward in 2019. And it revolves around investment strategy. So let's go ahead, let's get started. Market update, three major indices. All of them in negative territory for the year, all of them in negative territory for the month of December. Dow Jones Industrial was down 4.5%. The S&P 500 was down 5.21% year to date. And then the NASDAQ was down 0.68% for the year. So all the major indices were in negative territory for the year. People can say whatever they want. They can say it's tariffs. They can say it's politics. They can say it's the economy slowing down. Plain and simple, I look at it this way. Supply, demand. 2018, there was a heck of a lot more supply than there was demand. People were willing to sell more shares than they were willing to buy shares in 2018. And so with that, we see negative returns. Not only here in America, but around the world. Europe had a hard time getting returns. They were down over 14%. The world index, excluding America, was down over 14%. And emerging markets were down 14.8%. A trend, a topic around the world in 2018 was people had a hard time trying to find returns. When we look at the stock market throughout the year, what do we think? Markets will go up, markets will go down. Let me take a step further. Let's look at on a yearly basis, so how the returns were at the end of each year. There's only been demand in the markets since 2009. Since the end of the Great Recession, we have not had a negative year in the markets. 2018 was that first time we've seen that. So taking a step further, we saw demand after demand in the markets from the beginning of 2009 up until 2018. 2018 was the year where we saw supply. People throughout those years were buying shares, buying. The market was going higher and higher and higher. People found that, hey, they had returns. They were doing pretty well. Time to sell some of those shares. Again, it's part of the market. It's nothing out of the ordinary. There's years where we have negative returns. But positives moving forward. If you're looking long term, there's a lot of things to be looking forward to out there. Four sectors I'm taking a look at for 2019, and these are in order of strongest based on relative strength. Number one, technology. Even with two market corrections in 2018, technology is still the number one sector out there when it comes to relative strength. Number two, we have a change. Utilities is the number two sector out there when it comes to relative strength. I talked about this in my last market update in November. I was taking a look at utilities because it's been climbing the ranks. Well, utilities is the number two sector right now when it comes to relative strength. We cannot take our eye off of it. We have to at least acknowledge utilities is a strong place to be based off of relative strength right now. Number three is healthcare. I've talked about healthcare for quite some time now. It's still up there in the top three. So number four is industrials. Industrials can be aerospace. Those are the four sectors that are in positive territory when it comes to relative strength, at least in 2018. Returns wise, there's only two sectors that had positive returns for 2018. Two of them were in the top four that I just mentioned right now. Healthcare and utilities. Healthcare was up 5%, utilities was up 3.9%, so a little less than 4% for the year. Lastly, I want to share with you a little bit of knowledge, or maybe a tool, I guess I should say, that maybe you can use for yourself in 2019, and that being this, the bullish percent index. So what is that? Let me explain. I follow a company that got bought out by the NASDAQ called Dorsey Wright & Associates. I love their work. I love the research they provide. I love the knowledge that they share. They use one indicator of many called the bullish percent index. It gives you an idea of the percentage of stocks out there that are in relative strength buy signals. If markets are doing very well, we're going to have more buy signals out there. If markets are not doing very well, we're going to have less buy signals out there. So how I look at the bullish percent index is this. I look at it as a football field. So let me explain. I view the market, Dorsey Wright Associates views the market as a football game, where the play shifts from the offense to defense throughout the game. The ball changes hands throughout the course of the game. So the first thing an investor must know before investing is this. Which team is on the field? Do we have the offense on the field right now, or do we have the defense on the field? Because there's different plays and there's different strategies that we have to put in place depending on what team is on the field right now in this point in time. In a football game, there's two forces operating the field, right? The offense and the defense. The same forces act in the marketplace. There are times when the market supports higher prices and times when the markets don't support higher prices. When the market's supporting higher prices, you have possession of the ball. You have the opposite team on the field. And when you have the ball, your job is to take as much money away from the market as possible. You want the highest relative strength investments. You want the highest stocks out there that have the relative strength scores. Your job is to make as much return as possible and take as much return as you can from those markets when you have the offense on the field. If you have the defense on the field during the times when the market's not supporting higher prices, and you must put the defensive team on the field. So during these periods, in fact, we're in this period right now, we should have the defensive team on the field. The market's job, not our job, not the investor's job, but the stock market, the market's job is to take as much money away from you as possible. Their job is to take your returns and put them back with the markets. So our job as investors is to defend from what the market's doing. We need to have specific investments in place to help us protect ourselves returns when we have the defensive team on the field. So here's a couple thoughts that you can do right now with us being on the defensive side of the field. And again, these are just my thoughts. These are not anyone else's thoughts. These are just strictly my thoughts. Talk to your financial professional first. Talk to yourself, your family, your friends. Do your due diligence first to see if this is something that works for you in your case. If you have the defensive team on the field, I would look at ETFs. I would look at mutual funds. I would not look at individual stocks. There's a lot more risk when it comes to individual stock. I want something that gives us less risk. Of course, there's risk in everything we have, but ETFs, mutual funds, tend to have lower risk than individual stocks do. Also, too, I would look at cash, CDs, money markets. I would probably have a little more money there right now. I would not be looking at taking risks, taking gambles on specific companies, or have a hunch. Let's see if this works. These are not the times to do hunches. These are not the times to follow those one-off type of things to try to see if we get a return. When we're on the defense side of the field, we have to be disciplined. We have to make sure we have the right process, the right strategy in place. On top of that, if you want to put a little more defensive exposure for yourself out there, have trailing stops. You can put a specific percentage. So if a specific investment falls by 10%, so when you buy it and falls by 10%, or if your investment hits an all-time high and goes down by 10% from that all-time high, you can sell some or all of those funds depending on what your strategy is to either maximize the gains and keep the gains you have, or to minimize the losses. So there's a couple other areas you can take a look at when it comes to helping you win the defensive team on the field. But that's just one tidbit of advice I want to share with you right now. We have the defensive team on the field right now. It's not actually a bad thing, it's just we have to make sure we have the right process in place. Mutual funds, exchange traded funds, cash, money markets, CDs, trailing stops. Those are a couple things that you can use right now to your advantage. Without further ado, if you have any questions, please feel free to let me know. The next week or so, I'll be coming out with my 2019 market outlook, so keep an eye out for that. If you have any questions, if you have any thoughts, please feel free to let me know. I look forward to talking to you soon, my friends. Have a great day. Take care. Thank you so much. Have a good one. Bye-bye.